Hi, I'm Erik from the Hedge Invest Africa Opportunities Fund. I want to give you the May update. We were down about 2.26% for the month. It was a tough market for emerging markets. You had $12.3 billion redeemed from equity and bond funds, and that hit Africa too. You had the Egyptian market down 8%, Nigerian market was down 4%, and South Africa was down as well. We made money on our shorts and our bond portfolio, but it wasn't enough to offset some of the losses in the local markets. Strangely, the Dow Jones Africa 50 index, which we track, was up slightly in the month, but it has a bit more allocation to mining and oil and gas, which did all right, and less exposure to the local African markets. There's a lot of concern that May might be the start of a broader EM crisis that's going to get a whole lot worse, and maybe this is similar to the start of the very difficult markets for emerging markets in 2014 and 15, when the dollar was strong, commodities sold off, and then local EM stock markets, currencies, and bonds were all very weak. It was a particularly tough time for Africa, but I don't think this resembles that at all, and I don't think this is a repeat of that crisis. There's 4 reasons for this. We've already had a pretty strong sell-off in the African currencies during that period. The Egyptian pound and the Nigerian naira were down over 50%, and the South African rand was down 30%. So we've already had our EM currency crisis in Africa, and I think it's unlikely we're going to have moves like that again such recently. Second, you're starting with very high central bank rates already. For example, Egypt has raised rates from 8% to over 16%. So you're starting with very high central banks rates, which make the currencies defensive. Third, commodities are a lot more resilient. The mining companies and oil and gas companies have been very careful about supply and managing excesses in the market. So I think the outlook for commodity prices is positive, and I don't see any crashing from here. Fourth, lots of things on the ground are better in Africa, and one in particular is the power situation. In 2014 and 15, you had a lot of power outages across many countries, which were making a bad situation worse. You had disruption to factories, and you had sometimes copper mines being shut down for lack of power. Across the board, the situation is a lot better. Egypt, for example, built 20 gigawatts of new gas-fired power and has plenty of power. Zambia, the hydro dams are adequately full and there's no power outages. South Africa built 2 new massive coal-fired power plants, and they have so much power, they're actually selling surplus power to Zimbabwe. So in that way, the situation is nothing like 3 years ago. And I think with emerging markets, you're always going to have these swings in and out with money coming in slowly and then exiting very rapidly. And it's probably going to continue to be the case as people invest in ETFs and indices and don't really take much time to understand what they're investing in or visit the places where they're investing. And it makes you very easy to be swayed by negative newspaper headlines. We're, however, going to Africa all the time and seeing lots of positive things that you're probably not reading about, but they're happening. It's very constructive, and the valuations are fantastic in Africa. So I think there's a lot more upside than downside looking forward. We're very positive. Thank you.